Hey everybody, I hope everyone's doing well and had a good day. This video is going to be a brief recap of the Emini 5-minute chart for Thursday, December 12th, 2024. On the bottom left of my screen over here, we have the daily chart. And if we just look at the past, maybe 10 bars, we can tell the market is in a trading range. Going into the day, we have a rally, but bear bars, small dojis, not very strong, deep pullback. So we have a weak bull trend, trend line break, retest. The odds were there would probably be sellers somewhere up here, and the market would have a hard time going much higher if we retest up here because of these bear bars. The bear bars would likely get a second leg down as it trapped traders up here. You had bulls who were buying below this bull doji. We had a tight bull channel. Traders will buy below that bar, and those who did were trapped. And then you have bears who doubted the bear breakout. They did not sell, and they were trapped out of a winning trade. And you may have had even some bears take the sell, but they didn't trade as big as they would have wanted to with the follow through they got. So you have bears who did sell, also looking to add on on any pullback. So you have bulls trapped into a losing position, you have bears trapped out, and you have bears looking to add on. That's the whole dynamic around breakouts, breakout pullbacks, and second legs. So up here, the expectation was probably more sellers, and overall the market is in a trading range. Big up, big down, big up, with probably sellers up here. And going into the day today, we had a gap down on the open and a bear trend bar on bar 1. So the market accepted the gap. And you can think of the gap as simply a bear breakout bar. So it's basically this entire sell-off is a bear breakout. We finally got a pullback above bar 2. But bar 2 is a weak bull bar, and the odds are the first reversal will be minor, and when we have a stop order trigger, a technical pullback, the odds are it'll fail, and the bulls need at least some sort of trend line break and a double bottom to reverse this. What we ended up getting, we had a bear channel on the open. It was fairly weak. There were overlapping bars, a couple of decent bull bars along the way. And then we had a trend line break, or a channel line break. The bears broke below the channel, formed on bars 1, really all these bars, 1, 2, 5, 6, 7. The market seemed to be obeying this channel line. But then we had a breakout, an attempt at follow through, but then a sharp reversal up on bar 10. So we had 1, 2, 3 pushes down, the third push being the biggest push and breaking out of a channel line. So the bears really need follow through here, but 10 was a problem. Bar 10 is an always in flip bar. By that I mean any trader who is short probably will get out of longs above bar 10, because the risk is that we can test all the way back up here. If you consider bar 3, the start of the channel, spike, pullback, channel, we may have to test the top of the channel. We may have to go above bar 1, because in general, bar 1 remains the high or low of the day, only about 20% of the time. And we already had that happen, I think, 2 times this week. And the sell-off on the open, this looks more like a bear leg in a trading range than a strong bear trend. Bar 3 is a decent bull bar, closing near its high. 6, the same. And then 10, the strongest bull bar after 3 pushes down. This is probably going to need a second leg up, and then there was follow-through buying on 11, 12, all the way up to 14. You can see we tested the top of the channel. We tested above bar 1. This rally strong enough that the first reversal will probably be minor, and we'll probably get a second leg up. So then we got bar 15, almost outside down. It's a big bear bar, but the context is bad. It's following a bull breakout. And you know there are trapped traders down here. It's just like I talked about on the daily chart. And by the way, this blue line is yesterday's low. So this was also a failed breakout attempt. A breakout attempt of yesterday's low. Tried to break below and reversed up. So 15 coming after a 5-bar bull micro channel with trap traders below. The odds are there will be a second leg because you have bears who were short. Maybe they sold above bar 9. Not a very good stop order signal bar. 3-bar micro channel. This should get a second leg down. It might be dangerous if you consider it leg 3 because late legs, which is leg 3 or later, have a much higher probability of reversing and having deeper pullbacks, if not totally reversing. But say a trader sold above bar 9 or even bar 8 or 7. Traders selling above any of these bars got trapped on the bull breakout. It looks like it could not quite get here. So we rallied and we tried to get back to this breakout point, the bar 6 or 7 high, but 15 could not quite get there. And the one we did test up here. So if this was a test of the channel, we broke out above the top of the start of the channel, which typically becomes the top of a trading range. The market broke above it, vacuumed down to test it on 15, reversed up, tested it once more on 17, reversed up a second time. The bears had 2 reversal attempts, 15, and then trend resumption attempt 16, reversal attempt number 2, 17, and then trend resumption attempt number 2, 18. This is a high 2 for the bulls. But look at the trend resumption. 15 damages the bull case. This should not happen in strong trends. And this rally was mostly below the moving average, overlapping the prior bars, hardly broke out of bar 1, as you can see. 13 broke out but could not close above. 14 broke out, could not close above the prior bar. And then we got 15. Looks like a lot of profit taking. And at this point, the market, this is a reversal attempt. And it's either going to be the start of a reversal or it's going to be the start of a channel. If it is the start of a channel, the bulls are going to be more efficient and they're going to start buying pullbacks and taking profits at new highs. And so what we had here, we have a spike, pullback, and a channel. But the bulls, we had 3 pushes up in here, bar 16, pause, up to 19, pullback, and then 22. But we're failing every time we try to break out to a new high. The market's pulling back. This time we couldn't even break out to a new high, and look where the market's testing. The gap down, breakout point bar 80 or bar 81. Either one is good. Either one is expected to be resistance, and the market's having a hard time getting above this resistance level. Now that we've had several attempts up, we have a pullback 15, we're channeling. The odds are the channel will evolve into a trading range. So at a certain point around here, traders are expecting a deeper pullback down to test maybe the 15 low. And traders don't know, because it's big down, big up, the bottom of the range could be all the way down here. So up here, the bulls are hoping we have a bull trend, spike and channel, But then we start getting bear bars, 2, 3, 4 bear bars. After 3 or 4 bear bars, some bulls may start to just give up and expect these bear bars will get a second leg down. And if the market will soon be lower, traders would rather buy lower. So you have bears not willing to buy back shorts until the market is lower. You have bulls who don't want to buy until it's lower, because both bulls and bears expect lower prices, and we vacuumed right down to that price. But this is all too tight and too strong to buy against. The first reversal will probably be minor, and in this case we had a micro channel all the way down to bar 30, but 28 sold off and pulled back. And on a smaller time frame, bar 28 is a trend line break. First we had a channel line overshoot, and then we had a rally, and it's sort of a big down, big up, big down. The odds were there'd be buyers below bar 28. And we are testing the breakout point, which was actually just about yesterday's low, the bar 9 high, coming close to that price. We also have the bar 11 low. Could not quite get there. And then 31, a bull bar, closing on its high. It's a big bull bar. But because this is expected to get a second leg down, the upside here might be limited. 31 is strong enough for a second leg, so traders may wait for higher prices, maybe a second leg up before selling again. But overall, at this point, it looks like the day is some form of a trading range day. So traders are going to buy low and sell high. In trading ranges, traders are interested in value. They want to buy when it's cheap, and they want to sell when it's expensive. And it's less about momentum. And typically when you get momentum in your favor, that's where traders take their profits. So as soon as it looks bullish, they sell. As soon as it looks bearish, they buy. It's bullish, they sell. It's back and forth like that all day. So now we have a big up, big down situation where the bulls want a second leg after a deep pullback. The bears want a second leg down after a deep pullback. And it goes back and forth, big down, big up. Both the bulls and the bears want a second leg. The bears will probably get a second leg, but this rally will also probably get a second leg. So traders might hold off on selling until we get that second leg. The rally had a pullback. It's a two-legged pullback, 35 and 37. And then we had a micro double bottom down here. Down, up, down, up. And the odds were we would get at least one tick above 34 and get that second leg for the bulls. 1, pullback, 2. And you can see on 42 we vacuumed up to this price and then found sellers. And why did we find sellers? A couple of reasons. First, we can look back at look at bar 24 and 25. 25 is a breakout bar, so we have a breakout point at the 24 low. Traders were trapped here, and then traders were trapped again here on bar 34. Any trader who bought here on 34 and had this follow through is disappointed. What are they going to do on a retest? They're going to sell. So if you have bulls looking to sell at this price and bears are always looking to sell, bears are always selling. And then you have bulls who want to get out of the longs. That's going to create resistance. You can see this line held as resistance, and then we finally got 48, a strong second reversal for the bears, 1, 2, and follow through 49. So 48 is an always in flip where it's probably better to exit longs below 48 if you're still long, and it's reasonable to sell below 48 or 49 to go short for at least a retest of the bar 30 low close, maybe for a new low of the day. And the bears got good follow through here. It's a tight channel. This tight channel was strong enough that it would probably get a second leg after a pullback, and we ended up having a sideways pullback here, a minor reversal. There's actually more sideways to down than up, and that's good for the bears. Bulls trapped here, never had a chance to retest that high close of 62, and then we had a give up at the end of the day, which led to a second leg, 1, 2. Today was a bear trading range day. Even if we look at the daily chart and we see a bear trend, it's a bear trend to bar, but when we look at the 5-minute chart, it's more clear that we had a lot of two-sided trading throughout the day. The majority of the day was spent going sideways, up and down, but we did open up here and close down here. So the bears did control, especially the second half of the day. You could say even from here. The bears had a sell-off. We never had a break of this high. This was a major high, and we had lower highs here, and we had a channel all the way down to the low. Expectations for tomorrow. I said in the beginning of this video that it looks like the daily chart is in a tight trading range. Big up, big down, big up, big down. So neither side seems to be in control. It looks like we're going sideways and nobody's getting good follow through. When we rally, we sell off. We sell off, we rally. It's the same logic as because we rallied up here and had this bear breakout that created resistance above. But then down here, traders who sold the close of the second bear bar, breakout follow through, they sell the close, and then the market pulls back deeply against them. That is going to create support at this low close. So the question for me is, are we going to bounce here at the low close? Or are we going to get down to the moving average and maybe this breakout point? I think we're going at least a little bit lower. I think we're going to have to test the moving average. I think the bears are going to need a second leg down after this. But the question is, are bears disappointed enough in this rally to cover their shorts back at this low close, or will we continue lower? But I do think the upside is more limited. But because it's a tight trading range, we're up, down, there very well may be bulls buying below this bear bar and the bear close. So we'll see. Please feel free to leave questions in the comments. Please include the timestamps for any question specific to this video, and I'll try to get back to everyone in a timely manner. I really appreciate everybody for watching, and I hope everyone has a good night.